Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 11th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, US President Donald Trump raises the prospect of higher global tariffs after threatening Canada with a 35% rate on some goods.
JPMorgan's Jamie Dimon tells European leaders they're losing to the US and China as he warns of market complacency over tariffs.
Plus, bumping along the bottom, the UK economy shrinks for a second month in a row in a fresh blow to Keir Starmer and Rachel Reeves.
Let's start with a roundup of our top stories.
US President Donald Trump says he's now eyeing blanket tariffs of 15 to 20% on most trading partners. The comments in a phone interview with NBC News would mark a significant increase from the current US global baseline of 10%. The president also reportedly dismissed concerns that further tariffs could negatively affect stocks or inflation, pointing to recent rises in the US equity market. Stefan Hofer, Asia Chief Investment Strategist at LGT Bank, says that in the long term the impact of tariffs is far harder to assess.
Frankly, we are in uncharted territory. We've never seen anything like this. There is no playbook for this. We've gone from an effective import tariff President Trump's second presidency of just below 2% to the Liberation Day 27% down to, it's a moving target. And these kind of distortions are very, very difficult to map out and to model where we land finally.
Stefan Hofer was speaking as US stock futures fell and the dollar strengthened on the latest trade comments.
Well, separately, in a post on Truth Social, President Trump said the US will impose a tariff of 35% on Canadian products starting on the 1st of August. That would be 10% higher than the current rate applied to all goods not covered under the US-Mexico-Canada Free Trade Agreement. Bloomberg's Jill Desis says the White House is so far signalling that the free trade agreement holds.
This USMCA, that the trade agreement between the U.S. and Canada and Mexico, that those goods aren't included in this 35% tariff threat. I think that's really, really important because what that ultimately tells us then is that what Trump's ultimately doing, it appears, and again, I have to caution, this is a very quickly evolving story, but what that does mean potentially is that this is essentially a 10% tariff increase over a group of goods that were covered already with a 25% tariff.
Bloomberg's Jill Desis there. In response to the US president's threat, Canadian Prime Minister Mark Carney said that he would continue to defend workers and businesses. A large proportion of Canada's exports to the US fall under the rules of the USMCA, so would be unaffected by the new rate.
We're turning next to Jamie Dimon, who's sounding a warning about the muted market reaction to the US trade offensive. Speaking at an event in Dublin hosted by Ireland's Foreign Ministry, the JPMorgan CEO said, "Unfortunately, I think there's complacency." The Wall Street stalwart also weighed in on what he believes is a major European competitiveness problem, as Bloomberg's Chris Pitt reports.
You're losing. That's the stark assessment of Jamie Dimon, who says the EU has a huge problem at the moment when it comes to competitiveness, citing the region's sluggish growth. The JPMorgan boss pointed out that Europe's economic weight has declined significantly, falling from 90% of US GDP to just over 65% in the past 10 to 15 years. He says the best way to reverse that decline is to build an internal market that functions more effectively across all industries. Dimon's comments come as the EU seeks to conclude an interim trade deal with the US that could allow the bloc to lock in a 10% tariff rate beyond the August 1st deadline as they negotiate a permanent agreement. In London, Chris Pitt, Bloomberg Radio.
The UK economy shrank for a second month in a row in May as the country struggled to bounce back from the blow dealt by US tariffs and a raft of tax increases. GDP declined by 0.1% in the month before last after contracting 0.3% in April, leaving the economy at risk of a contraction over the second quarter. The figures are a fresh blow to Prime Minister Keir Starmer and Chancellor Rachel Reeves after a recent series of political setbacks. However, as inflationary pressures ease, money markets are betting that the Bank of England will cut interest rates in August and again by the end of the year, with further reductions in 2026.
Well, the UK's Prime Minister Keir Starmer says he's agreed on what he calls a groundbreaking deal to return migrants arriving in small boats from France. The pilot scheme was agreed with the French President Emmanuel Macron at the end of his state visit to the UK. Starmer says the agreement will mean that for every person sent back, the UK will accept an asylum seeker who hasn't attempted an illegal crossing.
This will show others trying to make the same journey that it will be in vain, and the jobs they've been promised in the UK will no longer exist because of the nationwide crackdown we're delivering on illegal working.
Starmer's been politically damaged by record numbers of asylum seekers crossing the English Channel. Roughly 21,000 people have made the journey in small boats so far this year.
President Donald Trump says that he plans to make a major statement on Russia on Monday as the US prepares to send more American weapons to Ukraine, paid for by NATO allies. In a telephone interview with NBC News, Trump said that he also expects the Senate to pass a, quote, biting sanctions bill on Russia after he criticised Vladimir Putin for his continued attacks on Ukraine. Russia has been pounding Kyiv and other Ukrainian cities with record numbers of drones and missiles. Ukrainian President Volodymyr Zelensky was optimistic about more aid at a meeting of US and European allies in Rome.
We must stop Russian drones and missiles. And this means more air defense supplies and more investments in interceptor drones, air defense systems, and of course missiles. And I urge all our partners, increase your investments. When Russia increases its attacks, we cannot have a shortage of funding for drone production.
President Zelensky speaking there at the Ukrainian Recovery Conference in Rome, where allies announced more than 10 billion euros in additional funding. The Ukrainian leader said that he'd since had a positive dialogue with President Trump over the delivery of Patriot air defence batteries.
Those are your top stories on the markets. The pound 0.3 weaker against the dollar, 135.43. The Bloomberg Dollar Spot Index is 0.2 stronger. On equity markets, the Stock 600 down by 0.4%. The FTSE 100 is flat. The CAC 40 in Paris down by 0.5%. And Wall Street futures pointing lower as well, down 0.4 for S&P E-mini futures.
Now, in a moment, we're going to get more detail on the latest tariff news with Bloomberg's Bill Ferries and also the UK economic picture with our UK economist Dan Hansen, the difficulties that we face. But I think it's time for something lighter, don't you? Hotels and luxury brand pop-ups. Sarah Rappaport has been writing about this. This is the crossover of fabulous hotels and scenery who are now using the fabrics and luxury design of all sorts of designers. Dolce & Gabbana for one, and also my personal favourite, Missoni.
Yeah, I mean, look, some of the pictures are so fantastic. So there's yes. Dolce, she has pictures of, there's a pool basically at the San Domenico Palace in Taormina in Sicily, which has Dolce & Gabbana towels and umbrellas.
Yeah.
And, like, it's quite a sight when you see them all together in one go. It really is kind of, you know, a pretty striking style statement.
Eye-popping, absolutely. And
I like it, but I accept that it might not be to everyone's taste. I think that's what I'm trying to say politely.
Yes, yeah, absolutely. Look,
more is more, Caroline.
I like more. I love the stripes, Missoni stripes on the pool deck. You've got Oku Ibiza and Cali and Mykonos, apparently, hotels using those. Yeah, and I think, look, the idea is also that they sell all of those goods in the fancy hotel shop. I mean, £600 for a Dolce D&G towel is pretty eye-watering also. But this apparently is the hot trend for the summer, so I had to just tell everybody about it.
Yeah, well, look, I mean, it's something that, particularly in places like Mykonos, the big luxury brands have been doing pop-up summer shops there for years to try and make sure that, you know, those very high-spending tourists that are going to what are now very expensive destinations like Mykonos in summer, you know, are getting to see those high-end products in front of them as well. But interesting to see them integrated into some of the hotels too. Sorry, I've just seen the Burberry-themed golf cart. This has gone too far. Okay, it's a great piece. Hotels luxury brand pop-ups are the key summer strategy. Sarah Rappaport writing about it. You'll find it on Bloomberg.com.
Okay, all right. Now we get back to the serious stuff then. The dollar has strengthened as the US president has again ramped up his trade rhetoric, threatening higher tariffs on Canada and also a higher global baseline rate. Our senior editor, Bill Ferries, joins us now for more on this. So it was a big number for Canada, but what about the detail? How significant is it, the idea of 35% tariff?
Yeah, 35%, definitely a big headline number there, as you mentioned. But the reality is, from what we understand, is that it's not going to impact a lot of the goods that are already covered under the USMCA trade agreement. And that's really the majority of Canada's exports into the United States. It won't affect big ticket items like energy exports as well, which is subject to I think currently a 10% tariff. So we're going to have to wait and see if and when this actually gets implemented, what the range of products is. But it is not an across-the-board tariff like many other countries are staring at this point.
Bill, this is something that we're watching at the same time where we're looking at questions around the baseline tariffs too, and whether or not that may end up being much higher for countries that don't end up with a specific deal as well. Is the sense that we are looking at an escalation from Donald Trump, as we're getting towards that 1st of August date?
It's certainly looking that way. I mean, countries since the Liberation Day reciprocal tariffs were kind of postponed, most countries have been facing this 10% tariff, which even that is much higher than the roughly 2% tariff the U.S. had in January before Donald Trump took office. But the numbers he's talking about, 15 to 20% is kind of the overall general base rate. That's a significant increase compared to what countries were dealing with, 6 months ago, let's say. And it's, we're still waiting to see if that trickles through to U.S. inflation, but it's certainly going to vastly change the trading system that the world had grown accustomed to up until January 20th.
Yeah, indeed. Bill, thank you so much for being with us this morning. Our senior editor, Bill Ferries, as we think then about the trade rhetoric and how that's going to translate into reality.
Yeah, of course, we're watching too to see what progress could be announced on a deal with the EU as well. We've been expecting movement towards it all this week as well. An EU trade ministers meeting on Monday. The question is what they will have to discuss at that point as well. Let's turn to the story in the UK that we've been following, though. The economy shrinking for a second straight month in May as the country has struggled to bounce back from the blow dealt by tariffs and a raft of tax increases. The decline 0.1% in May. That's after contracting by 0.3% in April. Let's bring in our chief UK economist, Dan Hansen, for more. Dan, the difference between minus 0.1 and growth of 0.2 that you were predicting, I mean, what does that mean big picture?
Morning, Stephen. Big picture, I mean, I think the way we tend to think about it in terms of quarterly growth. So 3 months, the first 3 months of the year, second 3 months of the year, and so on and so forth. Have we changed our view of what we think will happen in the second quarter of the year? The answer is no. And that is for a couple of reasons. The main one is that monthly GDP it's volatile, but it also gets revised. And if you look at the past path of revisions and you take account of what we've had today, and as you say, there was a miss relative to our forecast, but the net effect of all of those things actually is to leave the economy, at least relative to our forecast, in a similar spot. Now, one thing I would add to that is that the Bank of England is thinking that the economy would grow by 0.3% in the second quarter. That's what it said in its June minutes. So there is a bit of a gap on that expectation, but we think relative to our expectation of a growth of 0.1 on the quarter, we think we're still in the same place. And the big part of the picture is that this is obviously a huge slowdown relative to what happened in the first quarter. We had 0.7% growth, and this is about activity being displaced. So we had sort of a lot of activity in the first quarter of the year in anticipation of tariffs, and now we're seeing the effect of tariffs coming through. So I think if you're going to take it in the round, you'd probably want to average the two numbers to get a sense of where the underlying growth rate of the economy is.
Because there was such a hit and so much uncertainty around tariffs. I suppose Britain is struggling with low economic growth and low productivity. Are we in a lost decade? How do we turn that around? And that's the big question, isn't it, for the Starmer government? Are we in this kind of underperformance? Do we stay there?
So our view is that the recent history of UK economic performance, and I think I'm going back further than the pandemic, because obviously you can't take that and the energy crisis, and we've had this big rise in interest rates. But if you go back, if you think of the period from 2010 onwards, and if you compare that to, say, the previous decade, sort of 97 to 2007, there has been this massive step down in growth. And I think if you're thinking about what is the best guess for where things go from here, it's the more recent period of time that is a better gauge. Now, is that a lost decade? I'd probably say that's probably slightly strong, but we're in a world where growth is much weaker, and you're absolutely right to focus on productivity growth. That is the thing that has been lacking and has changed since the financial crisis. It's not a new phenomenon. Thinking about what the government can do and how things have changed, I think it has done some things that are good around planning reform, around boosting investment, public investment. The challenge with all of this is these things take time to come through and impact. And in the meantime, it feels like every year we get a new near-term shock, if you like, and that feels like it's been the case since Brexit. So you had Brexit and the speculation around that, then the pandemic, the energy crisis, you had the rise in interest rates, now we've got tariffs. And the real challenge is moving from the near term and having a solid base where sentiment is solid. That gives you the base to move forward. But we just keep getting knocked back with these various shocks. As I say, I think the government should be given some credit for the policies it's put in place. It's just being hit back by these near-term economic shocks, and the previous government had the same challenge.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.